Do you think any of this is an accident? And by the way, who do you think owns this stuff? Let's think about this. This is spot gold contract versus the fiat yuan, the Chinese currency. And it just goes back 10 years to 2013. But you saw how much gold the Chinese government is buying.
Join Lynette Zang in this video as she explores the dynamics between the spot gold contract and the Chinese fiat yuan over the past decade. Lynette Zang sheds light on the extensive gold acquisitions made by the Chinese government, a trend that has been gaining momentum since 2010 when it shifted into net positive territory for central bank gold purchases. But amidst the fluctuating tides of this precious metal's value, Zang unveils the subtle art of price manipulation, demonstrating just how effortlessly it can be executed. So stay connected with Lynette Zang.
And I think it's really interesting. I feel like I don't exactly feel like we're in the eye of the storm because there's so many negative things that are happening, but people have put their blinders on and it's like they're 2 years old. Oh, you can't see me because I have my hands in front of my eyes. I mean, that doesn't make any sense. So look at clearly what is happening because this is a global economy. And ultimately, they want it to get even more global, more under a one world management system. That's another story for another day. But we have to know what's happening in China because it's happening everywhere else too. China's gold binge extends to 7th month. Actually, that was back in June. It is now extended to 10 months. So China is gobbling up gold as quickly as they can. Why do you think they might do that? What is it that they are preparing for? And when I say China, I'm really talking about the government there. What are they preparing for? Because it wasn't all that long ago when the world comes to China. I said at the time that I didn't think that this was a good idea, that in my opinion, and it is still my opinion, that by the MSCI issuing an ETF tied to the Chinese markets, it was about funding the Chinese markets and giving them money. And that happened back on May 31st in 2018, and they're going to include that. Whoop-de-doo. And they are including it at a 5% initial weight, could lead to approximately US dollars 22 billion of capital inflows into these stocks. Well, that benefits somebody, but I'm not sure who that really does benefit. A leading provider of global equity indexes, which these things can be created at whim, and all they have is, like garbage. They're made up of garbage. They're not made up of anything that's real. But they announced beginning June 2018, it will include China A shares in the MSCI Emerging Markets Index and the MSCI ACWI Index, all that alphabet soup. So what was the result of that? Well, this graph starts in 2017, and the result of that was a flood of money into the Chinese markets, which is now reversing or has begun to reverse. But quite honestly, it is still at nosebleed levels. Do you think any of this is an accident? And by the way, who do you think owns this stuff? Let's think about this. Maybe retirement funds, maybe pension plans. I would say that a lot of entities that are investing your money into 401ks, wherever, they're the ones that are really supporting this more than anything else. Look at the level of equity ownership in all of these different areas of the MSCI, right? Still at nosebleed levels. So therefore, since you may not realize that you own it, I think that you need to be aware and double check and see if you don't indeed. Because what goes up must come down. And when you do stimulus, right, all of this debt creation and money printing for free, and it doesn't matter where that happens in the world, it makes things look like growth is great. Oh, look at the growth engine in China. Look at the growth engine in the US. So taking on new debt and creating cheap money can make things appear to go up. This is spot gold contract versus the fiat yuan, the Chinese currency. And it just goes back 10 years to 2013. But you saw how much gold the Chinese government is buying. And I mean, we've been seeing that seriously since 2010 when it went net positive in central bank gold purchases. But of course, it's easy to manipulate the price. Very, very easy. But we are near a breakout. Can you see that? And we're going to get it. We're going to get it there. We're going to get it here. But this is what I really wanted to show you, because I've shown it to you a lot in the US. Average premium in August, so that's the price that they pay above spot, rose to a record. Isn't that interesting? And haven't we seen that too with these super rarities in the gold collectible coins? Oh, yes, we have. A record high. The Shanghai London gold price spread averaged US dollars 40 an ounce in August, a fresh record high. And US dollars 23 an ounce higher month over month. What's that tell you? That tells you that the Chinese population can see their whole system falling apart. If you're just looking at this chart, can you see that? No, there's a cup formation, so there's an accumulation pattern, but it's not breaking out. But guess what's happening in the physical market? Breaking out. Boom. Done. You tell me, which market reveals the truth? And remember, wealth shields are made of physical gold and silver, not paper or promises, and not lies. And until next we meet, please be safe out there. Bye-bye.
In conclusion, Lynette Zang has provided invaluable insights into the relationship between the spot gold contract and the Chinese fiat yuan. With a decade of gold acquisition trends in China and a deep understanding of price manipulation, this video leaves us poised on the edge of anticipation for what the future holds in this fascinating financial landscape. How did you enjoy today's video? We would love to see your thoughts in the comment box. Please like, share, and subscribe for more insightful videos. Thank you.